All right. What is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about the stock market, all right? And we've got to go over the craziness that we're seeing right now. Now, the S&P 500 has 16 of 18 green weeks. Is this going to be a red week finally, right? It appears to be setting up that way. And if you take a look at seasonality, which we'll touch in a little bit more in today's video, March typically is a seasonal time when we see a pullback, right? We're basically right here, and you can see later in March is typically when we start to bottom out. Okay, so have we started that downturn for March, that seasonal downturn? It's starting to appear so. We've got stocks like New York Community Bank down 87% here recently from its most recent highs. You've got stocks like SoFi just tanking. Okay, SoFi is down like 15% just from a couple days ago. But meanwhile, there's lots of optimism still in the market. Now, Tom Lee, very famous for his bullish stance on the markets. He's really looking at IWM. He's very bullish on IWM. And I know a lot of people are bullish on IWM. So we're going to take a look at IWM today, go over the charts there. And then we're also going to go over just some data and some historical facts to help guide you guys through a lot of the noise in the market. We'll take a look at what happens with a good January, what happens with a good January and February, and then we'll show you guys the actual numbers behind some of these lines here that we're looking at. And things do look really good for the year as a whole. But the question is more of, what is going to happen in the short term, right? And that's what everyone's worried about. And me, I'll be fully embracing, if we do get some type of pullback and correction. Of course, we're going to talk about TLT a little bit. As I mentioned in a previous video, above 93, I like TLT. And that's continuing to work. We basically hit $96 today. Another nice move in TLT. Of course, TLT going up is going to result in treasury yields dropping. So we see TNX also dropping. We had a very nice top forming there. We'll break down those charts and go over the SPY. All right, so we've got this nice rising wedge right here. We'll go over the key gamma levels that we're watching and break down some of the intraday levels that we've really been paying attention to. Same thing with the NASDAQ QQQ. Okay, go over the rising wedge here and the gamma levels and also break down an intraday chart for you guys. And then we got to talk about the Magnificent Seven, okay? Because the whole narrative last year was it's only seven stocks. It's only seven stocks. And when you take a look at the Magnificent Seven, you're seeing a much different story, right? I mean, we just looked at QQQ. We just looked at the SPY. Those things have been making all-time highs. And meanwhile, we've seen many of the Magnificent Seven stocks rolling over and a few of them are in different leagues. Okay. Apple, Google, Tesla, they look way different than something like Microsoft or something like Meta or even Amazon. Right. And so we're going to break down those charts, go over what it is that I'm looking at. And then I also want to talk to you guys about energy. Okay. Energy, oil, something that I think a lot of people need to be paying attention to. We'll break down why in today's video. Okay. As always, though, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter called Investment Intelligence, giving out free, valuable finance content, trading content. And I try to sprinkle in one trade idea a week, maybe two. And this is what they'll look like, right? Highlighting the conditions on the chart and then showing you guys the actual chart itself. There is a website associated with it. So you guys can go back and just check out the website, check out some of the previous newsletters, really good content on there. And I think you guys will really enjoy the value you get, especially being that it's free. And if you want access to all my different analysis, all my different trade ideas, you guys can join the Discord. Okay. There is the Investment Intelligence Discord. It's only $10 a month. Trying to make it affordable for you guys on YouTube. And these are just some of the profit screenshots over February. March has actually been pretty good for us so far. So I'll have some March screenshots here updated in a little bit. But yeah, you can get access to every single one of my analysis, trade ideas, all the different stocks that I'm looking at, as well as valuable resources such as being able to spot gamma levels, get gamma levels from the Discord, dark pool levels, and many other resources such as custom scripts and indicators, right? All of that is available in the Discord. Link to join is in the description. Now, as we mentioned in the beginning, the S&P 500 has been on one of the most tremendous rallies we've seen in a very, very long time. Is that rally finally coming to an end? Well, seasonality suggests that it may be coming at least due for a pullback. Okay. If you take a look when you have the sitting president running, okay, in the election year seasonality, right? So this is for election years specifically, all right, which that's what we're in. This is how seasonality plays out. And you see that we typically get a little bit of a pullback here in March, and we really move sideways from March all the way through May, get one last little dip in May, and then, in the summer, from the summer to the rest of the year, towards the end of the year, that's typically when we see the bullishness, right? And so you can see the same thing here on this chart with the sitting president running in green. Okay, and that's what you're gonna see here. So we kind of go sideways, pull back a little bit, really until about the summer, right? And then in the middle of the summer is typically once we start to really kick off a strong rally towards the end of the year. So we'll see if that seasonality is going to play out again. This is my seasonality chart here on Think or Swim, and you can see something very similar here with typically a little bit of a pullback here in March. And when you really break it down, it appears that we kind of just go sideways a little bit, right? We kind of just go sideways up until June, with one last dip here in June, and then we start to see a nice little rally towards the end of the year in the second half of the year. Right. And I mean, there's been lots of things bleeding, guys. It's really been a stock picker's market because it's been tough. Certain stocks, I mean, you look at New York Community Bank down 87% from, the highs in the summer of last year. And then you've got stocks like SoFi that were, trading very, very well and doing really, really good, right after their earnings. See a huge pop here on the earnings, and it's given back all of those gains and actually made new lows since then, since the beginning of the year. Now, as I mentioned before, Tom Lee is very bullish on the IWM. We've got a chart here of the IWM and the equal weight S&P 500, basically showing that the IWM has had this quote unquote stealth rally, taking people by surprise. Now, one thing that people have to factor in was that SMCI was the largest weighted cap in the IWM Russell 2000, and it recently just got moved and included into the S&P 500. So that is going to affect it a little bit, being that SMCI has been having these ridiculous moves and huge percentage gains here recently. And, that's no longer going to be counted and help really boost the performance of the IWM. But when you take a look at IWM, we've really been range bound, right, for a very, very long time. And one thing that they say is the larger the base, the larger the rip in your face. Okay. The larger it rips in your face. You can see this huge, huge multi-year base here. And really, I think that above 205, IWM looks good. Okay. We already got above this 193 level. We've had false breakout here, false breakout here, false breakout here, little bit of a false breakout here. And now we're going to see if this is really the rally, right? And so for me, I really want to see us get above these 2022 highs over here, which are going to be 205. And if we can get above 205, the next target on IWM is going to be right around 213. Now above 213, it's blue sky territory. Okay. There's the possibility that it can come back and retest all-time highs, as many of the indices have been making new all-time highs, and different sectors in the market making new all-time highs. So until then, 213 is going to be the price target. I like it above 205, below 205, very, very possible, guys, that we come back down and revisit 193. Now, a positive January is a good thing for 2024. And the beginning of January was a little rocky, right? And a lot of people were thinking that we were going to have a negative month in January, but rather we actually did have a positive January. And that typically results in about a 16.8% gain in the stock market. And when you combine that with a positive January and a positive February, which we just had February monthly candles close, that also is an even better thing for the year. Typically, you're looking on average of 19.87% gains. And when you break this down, more specifically, okay, and we have here the performance when we have a bullish January and February, oftentimes this really means that the bull market is going to continue. Now, if you notice here, March is typically where you see most of the red. Okay. The average percentage higher here, basically the percentage that we're going to have a green March is about 70%. So those are still really good odds, even taking in some of the seasonality factors that we normally do have a pullback here. So, I'm not looking to be overly bullish in March. The data does suggest about 70% of the time, based on how January and February went, we could have a positive month for the month of March. But when you really look at the final 10 months of the year and then the next 12 months, this is where it gets extremely bullish. 93% of the time, we are going to end up higher. Okay. Now, the average return is about 12%. The median is about 11%. And then the next 12 months, the average is 14.8%, with the median being at 11.6, but it's 96% positive. So, you know, just because we may be seeing a correction, or a correction may be starting, right? I mean, 1 or 2 days isn't really enough to say that, hey, we're, getting a correction in the market. But even if one is happening, you really want to look and embrace the data and what it suggests for the rest of the year and over the next 10 months and 12 months. And those are really, really good odds, right? Over 90% that the bull market is going to continue. And so that really helps eliminate a lot of the noise of, hey, are we in a bubble? All these different things. One of the big differences I will say between the dot-com bubble and now is that we actually do have real companies that are actually generating revenue and generating profits and generating earnings, versus a lot of these companies in the dot-com bubble, they didn't have that. Okay. So, yes, maybe some valuations are getting stretched and maybe some valuations are extreme, but the market can remain irrational longer than you can remain solvent. So, just because, something may seem overvalued to you, doesn't mean that it can't end the year up even higher than where it's at right now. So please keep that in mind. Now, another clue that this bull market has legs left is when you take a look at the S&P 500 performance when you have a higher November, December, January, and February. Take a look at this, guys. This is absolutely insane. When you're taking a look at March, the odds increase to almost 80% that, the percentage is going to be higher, which is 78.6. But when you take a look at the calendar year returns, 100% of the time positive, right? The final 10 months of the year, 100% of the time positive. And the next 12 months, 100% of the time positive. I'm not one to bet against the odds. Okay. A 100% odds that we're going to have a calendar year, a green calendar year. I'm not looking for the end of the bull market right now. Okay. So perspective is something that you guys need to keep in mind. All right. Yes. Certain sectors look good, certain sectors look bad. All right. But when you step out and zoom out a little bit and try and, be unbiased and just let the numbers tell you what's going to happen, the numbers are very bullish. Okay. Um, and so let's start getting into some technicals, right? So we've got TLT here. I just did a TLT kind of a deep dive here recently. You guys can check that video out. So I won't dive too much into it. But basically, I was mentioning, above this 93 level, hey, I like this, right? We have this gap down to fill, which is in light blue here. Okay. And these gaps, they tend to fill about 90% of the time. And I said, hey, well, we came down, we filled the gap at 93. That seemed good to me. Seemed like we were putting a little bit of a base in here. And I was mentioning, I just like it simply long above 93 and, below 93. Hey, maybe we can potentially head lower. And I mentioned that we have one and we have two gaps to fill. And we actually just filled the first gap up today around 96. Or just below 96. All right. And we closed basically right at 96. We closed at 95.99, down a couple cents after hours, but the next gap up is going to be right here around $97. So again, when you look at the odds, right, look how close we are to this gap. We're basically $1 away, versus all of these gaps down here, right? We have one, we have two gaps down over here. The odds favor that, hey, price is going to be attracted towards this gap more, again, because they fill 90% of the time historically. The big question is when, right? Not so much if a gap is going to fill, but rather when will a gap fill? And so I like to, make a lot of gap fill trades whenever we start approaching some of these gaps, being that, hey, I know that this is an area where price action could be drawn towards. Now, one thing to note is that over the past 2 days, we did create a new gap down. So we do have a new gap down just above 94 that you want to be mindful of. Okay. So sorry about that. Any type of pullback, I wouldn't be surprised if we do come back and fill that gap. But ultimately, the thesis still kind of remains the same. Above 93, I like TLT for longs, and then below 93, maybe you can potentially look at some short opportunities. And things are a little bit clearer, in my opinion, when you look at treasury yields. Okay. This chart is a little bit choppy. Okay. Things were pretty easy for us to read over here. We got many signals that we were going to have a pullback and have a correction. And, when you take a look at the treasury yields, to me, it looks like we're in a very clear ABC correction phase. And so we've got the nice, wave down. We got a B wave up. We came right up to this zone. And this level exactly right here was a level that I've been monitoring and been mentioning to people. And that's exactly where we topped out, right? We put in a nice top over here. And I mentioned that, hey, it looks like we're putting in a top over here. You can see we've gotten follow through since that top, dropping significantly, from 4.25 all the way down now to 4.1. So ultimately, the target on the 10-year treasury yield, if it's going to continue dropping, that's going to be bullish for TLT, is going to be 4.0. Really, it's 4.032, but for round number sakes, it's basically 4%. And if we do manage to break those lows and break our most recent lows in January, then it's very possible the 10-year, in my opinion, can head down to 3.617. But there's a lot of work to be done for that to happen, and I don't expect that to happen anytime soon. But that ultimately that will be the next target if we end up, breaking below 4% and then breaking below the 3.8 lows that we put in the beginning of the year. Now, when you look at the SPY, okay, we do have our nice little tight rising wedge up here, and the call wall is 515. Okay, we got very close to 515. The call wall also happens to be basically $1 off from the next bullish price target that I had, which was 515.92. But for right now, we got very close to that call wall. And remember, the call walls, the way they're going to work is they're going to be a very, very strong resistance level. It's literally going to be a wall. And then above that wall, you have the possibility for a gamma squeeze, right? And this is where market makers have to hedge against all of that positive gamma. And now that gamma is in the money and they have to start buying up shares. And oftentimes this causes really quick, spikes in price. Okay. So, we won't spend too much time on that. I've broken down call walls. I've done a dedicated video pretty much on it and things like that. We are still above the zero gamma territory. Okay, so above the zero gamma level, which is 504, we are in positive gamma territory, meaning that the option chain is more bullish and is going to help prop up the market a little bit, being that we're in that positive gamma territory. And below 504, we're going to be in negative gamma territory. Okay, and your next support level is going to be right around 491, 492. That's going to be your next key major support level for the SPY. If we do break down below that 504. And of course, that would most likely coincide with the start of the fall of this rising wedge, right? So you may see something like this where we break down, retest this level, maybe break down, retest this. Okay, these are some possibilities you want to keep an open mind for, or you may just get a straight flush. Now, the put wall has been at 480, and this is a really big and strong support level. Okay. That's your previous all-time highs there. And if we do come down to that level, I'm pretty confident that there's going to be lots of buyers. Now, it may not be exactly at 480. It may be in this zone here from about 470 to 480. But ultimately, I think there's going to be lots of support. That will be a nice, healthy correction in the market. And then we'll see, if bulls step back in that territory. But remember, just like the call wall, the put wall is also going to be a very strong level of support. There's going to be lots of buyers here at that 480 level. Okay. And that's something that you want to pay attention to and monitor very, very much. Now, when you look at an intraday basis, 508 is really the point of control that we need to hold, okay, for the bulls. Okay, this is your highest volume node right here. And you see we have this little bit of a volume gap right in between here. This means that price tends to move very quickly through those areas. And so tomorrow, we may see a case where, hey, we might actually gap up on the SPY or tomorrow we may actually move up towards that 512 to 513 level if the bulls have control. But otherwise, we've got a downtrend, right? We've got a high, we've got a lower high, then we've got a lower high again right here. And then we've got lows, lower lows, lower lows. So if we break 508, which is that's going to be a very strong level. Okay, so we may bounce there and we may see a move up, but if we break below there, it's very likely that we're going to come down and test not only the previous lows here around 505, but you get very close to that zero gamma level, right? And then remember, if we're below the zero gamma level, we're going to be in negative gamma territory for the SPY. All right, now QQQ looks very similar. The put wall is much more elevated. It's much more raised versus the SPY was basically at its previous all-time highs. QQQ, you can see its previous all-time highs was right around 409, 410. All right, and our put wall here is at 425 for the QQQ. The zero gamma level is going to be at 434, and the call wall, just like the SPY, is very close to our bullish price target up here of 451 for the QQQ. The call wall is at 450. So you can see here that we actually bounced off of the zero gamma level today. Same thing as we mentioned with the SPY. Below there, you're going to be in negative gamma territory, and above there, you're going to be in positive gamma territory. So you do want to be mindful of that. If we were to break through this rising wedge here, okay, the previous all-time highs, all right, 409, 410, that area, basically 408 to 410, this is going to be a key area where you want to check for potential buyers to step in. Okay, that's going to be a nice, healthy correction from the top. And if we pull back to that area, I really wouldn't be surprised, if we have some buyers stepping in. Now, if we break through a lot of these levels, a lot of these previous all-time high levels, and then we'll have to reevaluate the market and reevaluate things, of course. Now, QQQ, all right, the key level for QQQ is going to be right over here around 438. Just below 438 is essentially going to be your point of control. Same thing over here. We have these volume gaps, low volume areas right here. It's very easy for price to move quickly through those. And so that would put it up back towards 444 to potentially 446 if the bulls are able to step in and hold above that 438 level. But below there, okay, most likely we're going to revisit that zero gamma level at 434. All right. So for the rest of the week, these are pretty much the key levels that you guys want to monitor and pay attention to. And again, when you look at the Magnificent Seven stocks, we've already seen these things rolling over. Okay. Apple put in its top back in January. Okay. And it's broken a key major uptrend here. When you take a look at the performance of Apple versus the SPY, so this is relative strength, relative to the market, it's putting in new multi-month lows, right? Meanwhile, the stock is just now testing its October 2022 lows right here, or October 2023 lows. So this is setting up for a potential double top, at the moment. So if we were to break through our neckline here, things could get pretty ugly for Apple, and most likely we're going to head down even further towards our next fib target here in Apple. When you take a look at Google, this is another one here that's been in a downtrend relative to the SPY. So the reason we look at this is because we want to see is there strength, right? Is this a market leader? And so you can see when Google was making higher highs here relative to the market, it was actually making lower highs. So this is a sign of weakness, okay? And here we have highs, lower highs. We have lows, lower lows, lower lows. So clearly a downtrend when it comes to the relative performance of Google. And Google, just like Apple, broke its recent uptrend here. It's got its fib level that it's approaching very quickly. And if we break below there, we've got some previous highs that I think that we could end up testing again, right? We had resistance over here, resistance here, support here, support here. It would make a lot of sense for us to come back and retest this level here on Google. Tesla. Tesla is basically about to break its 618 fib right now. This is basically its last line of defense, 176.78. Below there, we do have this little bit of a zone here. That we'll see if Tesla can end up holding and maintaining. But if we break through those lows, guys, it's very possible we head back down to $100 on Tesla. Now, that sounds crazy, but Tesla has really been in a downtrend for a long time when you take a look at this, and really been underperforming the S&P 500 as well as the other Mag 7 stocks. Now, Microsoft, meanwhile, looks great. Okay. It does look like, hey, maybe this one is topping out a little bit here too. But, if you notice, we're respecting some key levels and key zones very well. Now, this huge monthly cup and handle right here, we charted this up. A lot of the members in the Discord were aware of this, and we had some really great plays. It's been following the technical analysis really well. All right. We had a super clean wave four here, hitting and coming up right to the wave five highs at 421.36. That was really, really great to see. And so now, we're just looking to see, hey, what's going on with Microsoft, right? Are we basically going to be able to hold this 398 level? Below 398, most likely we're headed back down to 384 and potentially 361.50. Okay. But for right now, that's been a level where it's bounced, one, two, three times. We'll see if it can get some follow through, or you have your bearish price targets back down to the downside. Meta's been going absolutely parabolic. Not sure how much longer this is sustainable. It's on this huge parabolic curve right here. If we break through this, it's very, very possible Meta can come back down and retest its previous all-time highs, which are going to be right around 384. But we also do have this really big gap to fill here from about 440, just above 400 to about 405, 410. So, this would kind of be your first target area if we do break this parabolic trend that, Meta has been on. But look at something like Meta, right? Look at Meta, look at Microsoft, and look how different they look versus Tesla, versus Apple, versus Google. A lot of people are telling you that, hey, the market's only been going higher because of seven stocks. But that's not really the case, and that's not really the truth. And I've been covering a lot of the different sectors that I think are, have good potential, have good opportunities. We've taken a look at biotech, we take a look at the retail sector here recently. And the next one we want to look at here is going to be Amazon. Amazon has this nice uptrend, right? Also looks really strong. It looks a lot better. I would say this, okay? So Meta and Microsoft look better than Google, than Apple and Tesla. All right. And then you have Amazon kind of in the middle. All right. But Meta and Microsoft look better than Amazon. Okay. So Amazon here, it's tested this trend line four times here. If we come back and test this trend line again, is it going to hold, right? Are we going to be able to bounce a fifth time? Oftentimes they say that the more times a level is tested, a trend line is tested, the weaker it's going to get. If that's the case, Amazon's got a nice gap down to fill here just below 160. And I wouldn't be surprised if it revisits the 147.82 area. So, we've got a lot of these names. We talked about seasonality and, you're saying how a lot of the data suggests from a seasonal perspective that we could get a pullback in March. Meanwhile, when you just crunch the numbers and you take a look at, performance of the S&P 500 after bullish November, December, January, February, after bullish January, after bullish January and February, a lot of that data kind of suggests that March is going to be bullish. So I'm not telling you guys to go all in here and short the market, but rather saying, hey, if we were to get a correction in some of these names, it's not the end of the world. The data is still really bullish for the end of the year. And so I think one of the best things to do is try to figure out, what are some names that I want to get into if we were to get a correction, and what are some key areas of interest that I'm interested in getting into those stocks. One thing I do want to mention on, and this is going to be in the next newsletter. I'm going to send it out probably tomorrow morning, is energy, right? And so what we've got here is we've got a chart of the XLE SPY ratio chart in yellow, and then we've got the USO SPY ratio chart here in white. Both of these look like they're trying to put a bottom in. Okay. And if these are putting a bottom in and these are starting to go higher, meaning that energy and oil is going to start outperforming the market, the question you want to ask yourself is what is that going to do for the stock market, right? We all know how heavily weighted the S&P 500 is by big tech. Generally, oil and tech have an inverse relationship. So when energy prices are moving higher, typically you start to see tech pulling back. So, I do think it's worthwhile to take a look at some energy names, right? I've been posting a lot of energy stocks in the Discord, mentioning it to people, showing this chart over the past week, saying that over the past week or two, really just saying, hey, maybe you want to have some type of a hedge, right? If you're long a lot of technology or you have, a large market exposure to, the market cap weightings and the SPY or the NASDAQ, then maybe energy could be a good hedge for you guys to pay attention to. Sign up for the newsletter, okay? So you guys can see some of the individual names that I'm looking at. I'll be dropping that in the newsletter and kind of just going over the whole energy thing right now that I'm seeing in a little bit more detail. Remember, that's completely free. You guys can sign up for that using that link in the description, or you can just go straight to the website check out the website and, review it. You can sign up on the website, and you can get those directly to your inbox if you sign up, or, you guys can just keep a tab on the website and, check it for whenever there's a new one out. Or you guys can sign up for the Discord, right? So the newsletter is completely free. I try to put something out at least about once a week in there. Otherwise, I'm in there every day in the Discord, posting over 20 swing trade ideas every single week, posting all of my intraday analysis, updates on, what it is that I'm looking for. You guys can figure out, the day trading strategy that I use. I go over that in the Discord. So I have custom scripts and indicators to help you guys set up that day trading strategy on your chart, in case you're not really a charting expert. And there's many other valuable resources in there as well. It's definitely something that I think you guys will enjoy. And hopefully I see y'all in there. Okay, appreciate you watching the video, and I'll see you in the next one.